if you want to know where your money is going to be treated best, if you want to know where the strength is, if you want to know where the power is in the stock market, then I'm going to show you two stock markets. I'm going to tell you exactly where the power is, where the strength is, where the money is, where the performance is. So stick around, I'm going to show you. Hey guys, this is RC Peck, and I want to show you two stock markets. And the reason I want to show you two is because it's going to tell you where to get better performance. So regardless of where you live on the planet, this matters. Regardless of your age, it matters because it's telling you where the strength is, where the performance is, and where you want your money. So let's jump into this. Now, what I want to do is jump over to price charts, and I'm going to first start with, let's do this. Let's jump over here. And let me show you the two stock markets I'm looking at. So there's a black line on the screen and there's a blue line on the screen. The black line is the US stock market. Now I'm using the S&P 500 as a proxy, but even if I put in the all US market stocks, it would look exactly the same. So the black line is the US stock market and the blue line is the all world ex-US stock market. So basically we have kind of the two, what I call the two stock markets on the planet. Now, I don't know if you noticed, but they kind of were doing the same thing really until right around Jerome Powell, the Fed chair, the US central bank, came out and said, hey, we're probably going to, or we may increase our federal funds rate a year earlier. And we may have two rate increases in 2023 and not 2024. Now you look on the screen here and you can see the black line keeps going up. In fact, it just almost looks like it accelerates. So the US stock market liked what Jerome Powell had to say. The international or the rest of the world ex-US did not like that. Now, to me, it's interesting and important to know what these two stock markets are doing, whether you live in the UK or Europe or Asia or Australia or the US or Canada, because generally speaking, these are the two biggest stock markets on the planet. And right now, and really since the COVID bottom and since the global financial crisis bottom, the US stock market has been leading. One of the hardest things to understand, and we can zoom out here, I can look at both on a very long time frame. Actually, let me look at VEU here. One of the hardest things to understand is that investments, charts, symbols, sectors, indexes can trend much longer than you would ever believe. I mean, who would believe that at the bottom, March 6th, 2009, we'd be here 12 years later with the market up a gazillion percent? Like, it's hard to understand that that could have happened. Even after the COVID crash in 2020, where the US market and the international market fell 34%, they both got back up on their feet after 30 calendar days. That's one of the fastest falls ever. But this is the amazing thing about the stock market. It literally looks into the future and digests things that we don't even know about. But here on the screen is VEU. That's the Vanguard FTSE All World ex-US. It's looking good, but really just the last third of this price chart, if you look at that, it's really the last third of it is the only thing that looks good because this thing could not get above the trade war highs. So the trade war highs are just about to go off the price chart here over on the left. That's when Trump came out and said he's going to enter a trade war with China. And the losers I've talked about in past videos, the loser was really Europe, more so than emerging markets or China. They still got hurt. But here's all world ex-US, and you can see it really took a while for this to get above that. And the way you want to think about this is almost too, if you look at the between the two blue lines, the price could not stay above the top blue line, right? It got above it, it came back below. It got above it, it came back below. It couldn't get above it. And finally on the third try, maybe you want to call that the fourth try, it broke up and out. So that's all world ex-US. If you look at the S&P 500 or the US stock market, it looks really different. Here is the trade war high down here. It broke above it pretty quickly. It broke above it, pulled back, right there. But you can see if you look at the two blue vertical lines, it broke above it. And even in COVID, it went back down, but it got back above that resistance, that trade war resistance. So that's what we have today. We have the US stock market still the place where strength is. Now, I'm bringing this up this week in this weekly review because I'm getting tired. First of all, I'm already like the get off your lawn guy when it comes to a lot of things. Just kind of just a grumpalumpagus with things. But I've just been hearing so many ads how what you need is a globally diversified portfolio. You need a globally diversified portfolio. You need a globally diversified portfolio. That's crap. That's absolute crap. And you're seeing it here. And if we zoom out to the March 2009 low, way down there, and if I put VEU in there, VEU, and we have both of them, oh, that really didn't work that well. I have to go back. Oh, you know what? Let's do it here, SPY VEU. And if you do, okay, we're gonna get there, guys. Let's just go here, and does that really say 2012? Let's just see if we get it. Yeah, it doesn't. Okay, so I'm gonna go back, and what I wanna show you is, here's the S&P from the low of the global financial crisis, way over here. And from the bottom to here, the S&P is up about 700%. You put VEU in there, and VEU during the same exact time period is up 220%. So a quarter to a third as much as high. So that trend's been in place for 12 years. It's hard for humans to get the trends can stay in motion for long periods of time. We are just taught over and over and over again that you have to be globally diversified. Absolutely not. That is what's hurting your performance, or that's part of what's hurting your performance. The thing is, it's not your fault. You have not been taught this. Every big box advisor you've ever gone to said you got to get a well-diversified portfolio. You have to have a globally well-diversified portfolio. I mean, even hearing big box companies say, like, they're like extreme diversification, even better diversification, even safer, bigger, better global exposure. Like, they're doubling down and tripling down on being over diversified, and that's absolutely slowing the growth of your money. But if you understand how to read price, if you understand how to read strength and know where the signals are, then you can have your money in the right index, whether you live in the UK or Europe or Asia or Australia or Canada or the US. And that's really one of the keys. During the exact same time period, you can be growing your portfolio at a much different rate. Thanks, guys. I appreciate you being in my world. Please hit the like button, leave a comment. I would love to continue to grow the channel. I appreciate your active participation. And let me know where I got it right. Let me know where I got it wrong. What did I miss? What are you seeing that I'm not seeing? Maybe you're in another country and you see things differently. Let me know. Or you're here in the US and tell me, your point of view. I love to get the comments from you. I respond to all of them, even if it takes me a couple days. So I appreciate you guys being in my world. And if you like the video, check out our free course, Clarity and Control, absolutely free. It shows you how to start getting control back over your money and clarity over what is going on, what is working and what is not working. Thanks, guys, and I will see you on the next video.